So a little bit of risk aversion creeping into the Asian session. Certainly US futures have opened up a little bit low. We've got Dow futures down about 38 points at the moment. We've got gold moving up a touch higher. That's trading at $1,215 per troy ounce. And I think, if you look at, we print a higher high on spot gold, I think we could probably take it into the 1241 region. So that's looking relatively upbeat at the moment. Price action not particularly convincing, but the trend is moving higher in gold. And I think that's obviously a reflection of the US dollar weakness we've been seeing today, and also the fact that we're seeing fairly flat US fixed income moves. And that'll be one to watch for this week, whether or not we see people looking to buy into the 10-year US Treasury and whether or not we see the yields moving lower, in which case that'd be very good for gold. But nonetheless, we are seeing precious metals moving a little bit higher. In the FX market, probably the risk aversion could be seen best in the Japanese yen. Clearly, once again, tells you time and time again that the market's preferred mechanism for expressing concern is through the Japanese yen because of the high current account surplus they run in Japan, and obviously the perception of people moving money back to Japan. But for some reason we are seeing dollar yen under sizable pressure today. Now whether that's a reflection of Donald Trump coming out and suggesting that they want to withdraw from TPP, or whether it's the market's still asking a lot of questions around Trumponomics and whether that's going to create the levels of inflation that we've priced in, we'll obviously have to watch what happens in the fixed income market this week. And the TLT, which is the longer term ETF, is probably quite a good gauge on that. Whether prices fall or rise will be one that very people are watching very closely this week. But certainly the Japanese yen really being quite heavily bid today, and dollar yen under a bit of pressure, down about 90 basis points. So that's certainly on the radar at the moment. Here in the Asian equity markets, we've got the Nikkei really following down, dollar yen down over 1%. The ASX 200, which really since the 9th of January has been trending low. We've made 6 lower lows and a number of lower highs as well. And certainly if you look at the 5-day moving average, you can see every rally that we've seen into that 5-day exponential moving average has been sold. It's been a mechanism by which everyone's looked to raise cash allocations or looked to increase shorting allocations into the market. But that's showing that the ASX 200 is trending nicely lower at the moment. We're down about 3.7% from that January high, but literally every rally that we've seen on the open has been met with a wall of sellers, and the market has sold off from that opening strength that we've been seeing there. That tells you a lot about semantics. The selling that we're seeing, the broad-based selling that we're seeing, the only sector up is real estate, largely as a result of some buying in fixed income yields. But certainly if you look at the broad-based selling, most of that really centred around industrials. We've had a stock, Brambles, which have come out with an announcement today, and that stock's down quite heavily. But certainly broad-based selling across all sectors today here in the Australian market. Volumes have been okay. They've been fairly in line with the 30-day average, but certainly the ASX 200 trending lower. I suspect it goes lower from here as well. But certainly the theme of today has been a modest pickup in risk aversion. It'd be interesting to see if implied volatility in the S&P creeps up a little bit, because we are seeing a number of companies, in fact the bulk of companies, the large percentage of market caps companies coming out today. And I think from that perspective, if we do see a pickup in implied volatility in the S&P, that will show us a lot about what's happening in risk sentiment this week.